Welcome, everyone. Today, we are going deep on what I think is the single most powerful structural trend happening in the PLAZM protocol right now, and that is supply compression. We're going to unpack the mechanics behind a really dramatic shift. So yeah, let's just dive right in.
But first, as always, the important stuff. Just a reminder, this is for educational purposes only. It is absolutely not financial advice. You've always got to do your own research before making any moves.
All right, here's our game plan. First, we're going to talk about the one number that I believe truly matters. Then we'll get into the three powerful forces causing all this change. We'll put it all together to see the complete picture, and then we'll look ahead to why this whole squeeze is probably just getting started.
Look, we all get obsessed with the daily price chart, right? It's emotional, it's all over the place, it's often unpredictable. But there is another number, a much more structural number that really only moves in one direction. And it tells a much clearer story about where this is all headed.
So while the price is bouncing around day to day, the percentage of liquid supply has been on this systematic one-way journey downwards. And that's what we're focusing on today, the predictable trend, not all that unpredictable noise.
So that brings us to the big question. If it's not the daily price, what is the single most important number you need to understand to really get the health and the trajectory of PLAZM?
It is this number right here. 24%. Right now, only 24% of the entire PLAZM supply is actually liquid, meaning it can be bought or sold on the open market. The other 76%, that's what we call protected. It's either locked up by users who are earning rewards, it's being used to support the trading markets, or it has been permanently destroyed.
Now here's where it gets really crazy. Look at the speed of this change. Just 48 days ago, on day 84, half of the entire supply was liquid. Today, we're down to 24%. The sellable supply was literally cut in half in less than 2 months, and it was driven by three really powerful organic forces.
So, what are these engines driving this compression? Well, it's not just one thing. It's three powerful and independent forces all working together: staking, burning, and liquidity provision. Let's break down each one, starting with the biggest driver.
Okay, first up, the staking engine. You can really think of this as the conviction engine. This is where token holders lock up their PLAZM, they help secure the network, and they earn rewards for doing it. In just those 48 days, the amount of staked PLAZM more than doubled, pulling another 1.39 million tokens out of that sellable supply. Every single token staked is a long-term vote of confidence.
Second, we have the burn engine, and this force is permanent. Staked tokens are locked, but burned tokens are gone forever. In that same 48-day window, the number of burned tokens went up by a factor of 10, permanently destroying over 1.18 million PLAZM. To put that in perspective, nearly 1 out of every 5 tokens that has ever been created no longer exists.
And the third force is the liquidity provision engine, or LP. This is where users pair their PLAZM with another asset to create the pools that actually allow for trading. It's a really strategic move that strengthens the protocol's foundation. And in our little 48-day window, over 735,000 more tokens got moved into these pools, which deepens the market and makes the price just that much more resilient.
Okay, so we've looked at the three forces one by one. Now let's put them all together and see the truly stunning transformation of the supply structure from day 84 to right now.
So this is where we were on day 84. A full 50% of the supply was liquid, just sitting there, available to be sold. Staking was strong at 31%, sure, but the protected supply was still only half of the total.
And look at this. Fast forward 48 days, and that liquid slice has been dramatically squeezed down to just 24%. You can see right here how each of the other categories, staked, LP, and especially the burn slice, has just grown and eaten into that sellable supply.
So the bottom line is this. Over 3/4 of the entire PLAZM supply is now protected. It is off the market. It's locked by conviction, it's strengthening liquidity, or it's been permanently destroyed.
And when you add it all up, the numbers are just massive. These three forces converging have absorbed a combined 3.3 million tokens from the liquid pool in only 48 days. This isn't just some small shift. This is a fundamental restructuring of the protocol's supply dynamics.
Now, here's the thing. This trend isn't slowing down. In fact, there are some very clear reasons to believe the compression is about to accelerate. So let's look at why this squeeze is probably going to get even tighter from here on out.
There are 4 key factors that are going to drive this acceleration. First, the number of new tokens entering the market.
That's about to drop off a cliff. Second, the burn engine is perpetual. It's designed to run forever, funded automatically by the protocol. Third, the way staking rewards work creates this compounding incentive to keep tokens locked up. And finally, more of the protocol's revenue is now being used to strengthen those liquidity pools, which speeds up that engine even more.
So why does any of this matter for value? Well, it all comes down to a very simple formula. The floor price, that's the theoretical price backstop, is basically the protocol's liquidity divided by the liquid supply. So as that number on the bottom, the liquid supply, gets squeezed smaller and smaller, the floor price has to go up. The compression itself strengthens the floor even if not one new dollar comes into the system.
A really useful way to think about this is to compare it to Bitcoin's halvings. Every 4 years, the new supply of Bitcoin gets cut in half. It's a scheduled supply shock. Well, PLAZM's compression is kind of like a halving that happens every single day. And it actually goes one step further. It doesn't just reduce the new supply, it actively destroys the existing supply through all those burns.
So let's just run those numbers back. 50% to 24%, 3.3 million tokens absorbed, 1.31 million destroyed forever, 76% protected.
And it's accelerating. The new releases are dropping off. The burns are perpetual. The staking is compounding. Each of these forces is building momentum.
Bitcoin has halvings every 4 years. PLAZM has compression every single day. And the math? Well, the math only goes in one direction.
Thank you so much for joining me for this deep dive. And as always, just remember, this material is for educational purposes. It is not a recommendation to buy or sell anything. Never invest more than you're willing to lose. And please, always do your own research.